Hey guys, Joe here from JCS-Charting. Welcome to another market update. I have discussed the DAX upside and downside volume quite a lot in my previous update. I kept saying as long as the upside volume keeps dominating, DAX is on bullish momentum, which means you should buy or should rebuy all these little sell-offs. Since the beginning of December, the upside volume keeps dominating. That means much larger positions are on the call side. We saw a little decline here, a little crossover, but on that second decline, the upside volume kept on dominating throughout last week. We have seen similar occasions last year from January until March, and we have seen a similar effect here after we saw that drop in April. And even on the long-term indicator, the weekly time frame, upside volume keeps even more dominating throughout the year. Another good intermediate indicator is the percentage of stocks above the 100-day moving average. And we see here over 74% of all stocks of DAX, which means roughly about 30 stocks, are above their 100-day moving average, which is also a bullish sign. The same we have with the 150-day moving average. Still 71% of the stocks are above that moving average. And even the percentage of stocks above the 200-day moving average, which is the long-term indicator, shows that 74% of their stocks are above that mean average. And last but not least, the advanced decline line on the daily time frame, which measures accumulated difference between the advancing and the declining stocks, keeps on rising and is already at new all-time highs, while DAX is struggling to get above it. This indicator is usually a leading indicator. We have the same indication on the S&P 500, and it also aligns with smart money, which was buying, by the way, during that entire decline here at DAX, and since then it kept on rising and it started actually to accelerate. This, for instance, is my Discord channel. If you want to have updates on these indicators on a frequent basis, you are welcome to sign up at www.jcs-charting.com. If you buy the advanced membership, you get a channel which is called Indicator Reports, and here you get all various indicators on the S&P 500 mainly and DAX. I also look at NASDAQ or the NYSE, and here you see it once again, that advanced decline line. We had a similar effect here of these lower highs at the index, but the advanced decline line kept on rising. That happened from September into November. And then we saw that crazy rally which started in November into January. And then now we are seeing a similar effect at DAX. And I also compare here smart money, which gives us the flows of the big guys at the markets. This here is the DAX daily chart based on the Cetera indication. We have here in red that broadening top, also known as that trumpet pattern, and it looks like DAX wants to break here to the upside. It back tested that upper trend line here last week on Thursday and on Friday with these lows. By the way, all fair value gaps which got created here are filled. There's also that inverse shoulder pattern. We missed that first target by just a bit, and I kept saying at my blog, at my Discord here, that during these rallies, volume started to increase, while on these declines, volume started to decrease. And we have seen the same on Thursday, declining volume, advancing volume on Friday. This here is one of my H4 charts of DAX with the JFD indication. I dropped that W-shaped bottom here, which is very bullish. It has a very bullish nature. I have discussed that very much in detail at my Discord for my members. I even dropped that on X, and on Friday we saw the, basically the pressure release we were building up within that green sequence. We have hit here all these minimum targets, but I believe we are running into 25,458 very soon, which would be a back test of that all-time high here at 25,512, a pullback, and then we should run to the advanced line of that green sequence. By the way, we have discussed that W-shaped bottom somewhere here when that whole pattern was in the development. And this is a VDAX on the daily time frame. We have, by the way, a very similar setup on the VIX, the volatility index for the S&P 500. I kept saying since I think the beginning of the year, I'm looking for a volatility crush into the end of the year, into the end of the month of February, beginning of March. That usually results in a rapid rise in DAX or the S&P 500 or all general stock markets. I prefer to hit that red line here, or to dive at least into that green zone. A gap close of 16.11 or 14.72 would be highly appreciated. Gold has been discussed also quite a lot in my previous updates. There is a bearish Wolver wave wedge in the build up. Here's a high, a low, a higher low, and we're looking for another higher high to trigger that pattern. Best case, we touch that upper trend line here shown in red, but that blue sequence has triggered for higher. Minimum targets are between 5245 up to 5318. Silver on the H4 time frame shows a clean corrective ABC structure. The 300% target runs somewhere near 94.16. Our max extension is 107.90. There are also a few sequences in between, but these are for members only. But we are looking for a C up and then another leg down to fulfill here these targets of that purple sequence. Even 52.08 is possible at this stage, but I usually prefer $62 to be hit again after we completed leg C. We continue with the S&P 500 daily chart, but not cash indication. It's a JFD indication, which is a bit different. The cash tested the 100-day moving average the last 3 trading days. The JFD did not, because this price indication runs pretty much all the time except 1 hour before midnight. However, there is a different pattern than in the cash market. You see here prices already contracting in a so-called symmetrical triangle. I would prefer here, in order to call that a symmetrical triangle, in order to trigger that pattern, we need the third touch here of that upper trend line. Then usually we see a fake breakout that would probably another test of these all-time highs, a pullback, and then a breakout. There's also in blue here a broadening top pattern, which consists out of a high, a low, a higher high, a lower low, and another higher high is missing. And I would prefer that sometime in March, somewhere near 7051. Quick look at the H4 time frame, still the JFD indication, and here is a so-called descending broadening wedge here in blue, and this is nothing more than a kind of bullish flag channel, but price is expanding, so it doesn't run in a clean channel. Price dropped here way too deep in order to call it a channel. That's why we call it a so-called DBW consolidation. And we were buying these lows here because we had that number here in the chart, 6729. I'm still actually heavily long at the S&P 500. I considered, because that pattern triggered right here with that third touch at that upper trend line, it pulled back quite deeply, deeper than I thought, as you can see in that projection. And we are looking actually for target somewhere near 7153. This is also a bit lower than our first target of that blue pattern at 7225. We continue with the NASDAQ weekly time frame. This time it's a cash indication. You see here a so-called ascending triangle shown here in blue. You have a trend line which is rising, and you have a horizontal resistance line. So that's why we call it an ascending triangle. However, in order to trigger that pattern, we need another touch at these all-time highs at NASDAQ before this pattern actually triggers. What's quite interesting is the EMA 30 on these weekly moving averages was support 3 weeks in a row, which is another bullish sign here to confirm that up momentum. That means that here has been just basically a sideways consolidation, similar to what happened to DAX over the summer and to winter period. And we might see the same effect here on NASDAQ, but probably or most likely for a shorter amount of time. And if we zoom out here, the weekly time frame, you see another broadening top shown here in the red. The starting point is July 2024, and if we project the first target, that is at 29,876, and in my point of view, that pattern is already on its way to the upside. These kind of chart patterns, they like to oscillate around the upper trend line until they hit that first target. H4 time frame, JFD indication of the NASDAQ in blue here, that bullish Wolver Wave wedge pattern, which broke out of that upper trend line on Friday evening, and it tried to reconfirm that upper trend line. I made almost 1,000 bips here on that swing while I bought these lows and cashed out 2 hours later. We also bought these dips here, by the way, at our red 138% that likes to be turnaround, or the 161.24.403 got hit. We missed out that last expansion by 40 bips only. However, we took profits right here and we rebought these positions last week. By the way, there's a trades channel at my Discord where I publish all my intermediate swings. I'm a swing trader, by the way, because I like to take larger moves and not these intraday price action. And one last word on the Dow Theory on the weekly time frame. At the top you see the Dow Jones Industrials. This is a famous good old Dow Jones. It has been there for over 100 years. Below here you see the transportation index of the Dow Jones, which has just the transportations in that index. And what you usually do is you compare high and lows, and you look for divergences. We had the last positive divergence was in 2025, while the transportations made a lower low compared to the low out of 2023. The industrials made a higher low, and that was a very strong buy signal back in April. Now we had a very large divergence at the transportations since 2021. That was that last all-time high we have seen, and since then we had that negative divergence to the industrials. The industrials kept making new all-time highs since 2023, and the transportations, they failed on that for almost another 2 years until now. There was actually a double divergence here, that sell-off into April, and now we broke that divergence, which is a bullish breakout. The transportations are usually a leading indicator. Whenever the economy is weak, the transportations, they suffer first, and this is also the opposite around. If the economy is good, the transportations usually lead and show us the way of the general market. And this is what's happening right now. Transportations are breaking out. They are well above these all-time highs, while the Dow Jones is also breaking out. But this is here a strong buy signal for a certain amount of time, until we see a divergence like that. We had, for instance, another divergence at that high and that high. We sold off here, but then that breakout came. But here was another divergence at these transportations as well. That about the Dow Theory. And now for the end, we look at some indicators for the S&P 500 as well. And I know there are plenty of other analyzers on X, but most of them, believe it or not, have a lot of false signals and a lot of false information, because the interpretation most people read out of these charts is wrong. Here, for instance, we have the upside-downside volume at the S&P 500. We looked at that at DAX. We had a very similar reading to DAX here, and since the middle of November until January, and we saw a breakout, or we saw price was advancing with advancing volume. Then the S&P entered a sideways period where, well, upside volume was still dominating, and it keeps dominating for that entire period. That means bulls actually keep holding up that momentum. Very strong similar indication, by the way, from April last year all the way up to July. Very similar readings at DAX again. Here, for instance, you see the S&P compares the new highs versus the new lows. This is another trend quality signal. And you see much more new highs are generated than new lows. Yeah, new lows started to pick up, but I also saw analyzers here on X which show very different information, or the interpretation of these charts is simply wrong. By the way, all that signal, all these indicators are provided by my partner, Wall Street Courier. And the last indicator I wanted to show you is again the advanced decline line. It kept on rising basically throughout that entire sideways consolidation. That means the advanced decline line again is a leading indicator, and it shows you for the intermediate outlook the market is healthy. It wants to pick up on that line. There are dips like here, yes, and that causes like a 5% decline, but overall that trend here from that low has not been broken. This price action is just a consolidation in my point of view still, before the S&P actually keeps on breaking up higher. Yeah, that's about it for today. I hope you liked that video. It was a bit longer than usual. Much more indicators were shown. If you want to be part of my community, you get plenty of updates during the day. You're welcome to join us there. Members are very happy. We are also on Trustpilot. There are a lot of reviews, so this is not a fake or whatever a few people might think. If you like that video, leave me a comment or a like, and I see my members tomorrow at the Discord, and they get much more updates during the evening today. I wish you a nice remaining Sunday, and bye-bye.